A stock shock is imminent. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, an unexpected shift is about to send stocks crashing, and I want to show you as we dig into the technicals and momentum of the equity markets, the bond market, gold, and the dollar, that there's still time for you to avoid this. Plus, we have a sponsor for today's show who is activating the full potential of therapeutic neurotoxins. This biopharma company, when you see the chart set up, I'm going to show you why there's a potential 14% move in the short term, and over the longer term, how there could be an even bigger 58% move. You got to see the chart to believe it. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, if you're wondering what we're doing in the server room today, well, as you can see, the machines have gone haywire. Let's over to Bloomberg, where we picked today's story up with the headline, "Stocks Crush a Year Bond in the Biggest Sentiment Shift Since 1999. And this is really important because a lot of investors don't really understand what sentiment is. And this is when you see people get very bullish or very bearish about any sort of sector, whether it's stocks or bonds or anything else. And when people get extremely moved to one side of the chart where they believe that, hey, it doesn't matter what happens, the stocks are going up or bonds are going up or whatever they're looking at, well, the market tends to have a big shift in the other direction. Is now being overrun, though, by an avalanche of demand for equities that has unleashed a furious rally across the globe, and sign the gains are likely far from over, made investors more optimistic about stocks relative to bonds than any point since sentiment trader models began comparing them. Get this, 24 years ago. So if you're looking for an extreme view of the markets, a positioning that's perhaps looking for a shift, well, now you can see it. But check this out. There are only two other instances when stocks versus bond sentiment were so widely apart. That was in 2003 and in 2009. And get this, both coming out of protracted bear markets. Now, arguably, we're not in a bear market, and indicating a dramatic shift in investor expectations. Both preceded, amazingly, new bull markets. Now, the question we're going to ask you when you look at the charts, do you see that we're coming out of the depths of a bear market, heading into a new bull market, or maybe we're already at the extreme end of a bull market and that investors are completely mispositioned? I'll let you be the judge. Let's head over to Goldman. Now, we don't have an update. We note that their team on the CTA models is, well, they've been kind of absent for the last couple of weeks, but that's only because we start to see extreme positioning, and we're not going to likely see an update until there's a big shift. But let's look at this over the last month. Now, if we had this data 2 weeks ago, so what can we note that's happened over the last 2 weeks? Well, stocks went up, so we note the machines would be buyers here. And so what you're starting to look at, and we've talked about it, not only are you seeing sentiment from investors being super bullish, but what about the machine positioning? Well, they're tapped out to the long end. So we note that once everybody's piled in a position, well, something shifts, and what starts to happen is momentum wanes and rolls over. Well, you can bet the machines are going to be the first to sell. And that's why in a down tape, as we go backwards here, $209 billion to sell in a down tape. We haven't seen that, but that is the warning we should be looking for. Taking a look at TD Securities, they're maxed out too. Now, unless the S&P drops below 44.75, you're not going to see any selling from them either. Again, machine positioning maxed out to the long side. So let's take a look at momentum now and the CTA positioning, the models on our models, and let's see what we can find. If there's a market here that's looking tired and perhaps ripe for a correction, well, maybe we can see it. So let's see, we have momentum is positive. We have an RSI. What we want to do is see that over 40, and it's at 69, just right near overbought territory where it's been bouncing off of that for a while. We know that it could remain overbought for a while. At some point, there is a shift to the downside. The MACD is already starting to show that. Our momentum timer pro report, this takes a look at multiple different technical indicators to smooth them out, averages them out. It's showing 44 consecutive daily buy signals. Now, down here over the 1 month window, the 3 month window, and the 6 month window, what do you note? It says max. It means it's maxed out. So again, even technicals are kind of maxed out across multiple time periods. We're still holding our buy it open at 404.09, set back on March 30th. with Friday's closing at 456.92. As we keep noting, tighten up your stops. Don't let these gains go away if markets shift to the downside. We're holding our upside target at 464, so we think there's another push up here. A downside target is at the 50-day moving average, and you can see our machine positioning. This is from our CTA-Timer Pro report. Links for both of our report in the description below. You get a 30-day money-back guarantee. All you got to do is send us an email. You don't like it, we'll refund your money. So try them out, and what you're going to see is our machine positioning is way ahead and better than the ones you see from Goldman or anyone else, because we run a historical overlay. Whoops, let's head back and get the charts on the screen. We're going a little too far ahead of ourselves here. And let's take a look at SPY. And when you see these big moves to the upside, they run out of steam. I mean, there is a point where we can look backwards here. We'll hit the 5-year chart, and you can see big moves eventually get hit by a correction. And that's kind of our call here, is we haven't seen one for a while, and stocks are kind of overdue to see that. This is an opportunity for you to lock in some of those gains, tighten up those stops, maybe even do some repositioning here. And note, we see this inverted head and shoulders. Here you got a left shoulder, another one, a head, a right shoulder, neckline, and a breakout, suggesting this could go a bit higher. But I'm going to say that, hey, you get into this 463 to 470 range, and you're going to see some sellers reemerge. And why is that? Because there were buyers up here, and they're down, and they want their money back. And look at this. We're starting to see the MACD kind of flat line and look to head lower. We're seeing this overbought condition on the RSI. At some point, it's going to get tired as well. So keep that in mind, especially if we see a meaningful shift in momentum. The machines are eager to sell. Let's take a look at the techs here. We got QQQ, momentum still positive. RSI at 66, MACD negative cross, momentum time Pro, just like the S&P here. You see, look, 58 consecutive daily buy signals, maxed out across the 1, 3, and 6 month windows. Telling you, momentum is at an extreme, and our CTA models have pulled back a little bit here. You'll note on this, and what this is telling you, a lot of people get some questions. Does this mean you should sell? It means maybe you should even look at taking some of your profits off the table, or a real simple solution, raise your stop loss levels up. It's not suggesting it can't go higher. It's just giving you a little cautionary warning here on our report. Again, links in the description for both of those. We remain our upside target at 392. Friday's closing at 383. Downside target also remains the 50-day up into 400. And I think we're tired out on this big move. There's bound to be a correction here. But again, a nice setup, a nice rally. Our CTA report nailed it down here and right in here, as many of you already know. So check that out. All right, let's go on to the bond market now. And what do we note? Again, no updates on this either. I'll give you some from TD Securities in a moment. But we can see in an up tape, they're big buyers. In a down tape, which we saw they were sellers, and that actually happened last week with Thursday, of course, due to the move by, or the comments by the Bank of Japan on their yield curve control, sent the markets in a turmoil, at least the bond markets. But how about this? What do we see? CTA position, this is under 3.8%. 3.85% to buy. I did get that a little decimal in the wrong place. Over 4.1 to sell on the 10-year. So that means there's a little more potential selling, but not a whole lot after that. It's done. But let's take a look at the Wyckoff bottom pattern here, because I think we're seeing this spring right here. We saw the creek. We saw a big move down, and then we saw a rally up, and I told you it would probably get rejected. It did. We saw a pull back down, and at some point, the reason you see this kind of price go up here is because not only do you see the machines who, gone haywire here a bit, but you see at some point the sellers have sold everything they can sell. They've shorted everything they can short. And if price doesn't go down, well, again, you get extreme positioning and you see reversals. Let's take a look at TLT. Momentum remains negative. No surprise there after Thursday's move. RSI is down at 42. Not getting quite below positive momentum, but getting near there. MACD is negative. So Momentum Time Pro, 2 consecutive daily buy or sell signals on that. Upside target remains at 101. Friday's close at 99. We're still holding on to our buy at open at 106.88. Again, looking like a big reversal is coming. Still holding our downside target. You'll note that our CTA-Timer Pro is following this down just as we would expect. It's saying that what you see from, say, TD Securities is off a little bit. They're pushing almost extreme sold positions, and our historical model says, I think you got this a little off here. Let's take a look at the charts and see what we can find. And what we're looking for is that spring, and let's zoom in here to the 1-year chart, and you can see this move right here. We'll zoom in a little bit further here. What I want you to note is look at the volume profile line. The sellers, that volume profile was up at around 106 in the mid 106s, and then moved down and moved down, moved down. Sellers are getting more aggressive to the downside here, and price is just not breaking down. But here you see there's that kind of move, that spring we talked about, that final last move as it pushes down. We said it was going to rally up, ran the sellers right at that volume profile. They pushed it down, and lo and behold, couldn't break it. If they cannot sustainably drive bond prices lower here, look for a reversal and a lot of shorts that need to get covered. All right, let's take a look at gold. Buying above 2,000 an ounce, selling below 1970. So keep in mind, maybe not getting a big push from gold on the machines. We know there's a triple top in play. We'll look at that in a moment again. Momentum remains positive on GLD. The RSI is slowing down a little bit at 52, but you still have a positive cross on the MACD. 16 consecutive daily buy signals on Momentum Timer Pro. So it picked up that short-term shift. We're still saying not a long opportunity. I know this is not the view of many of you, but that's okay. Our charts say the price is likely to go down. Upside target remains at 184.34. Downside target just revising the 200-day moving average. We can see that our machine positioning has picked up that move and it's holding some fairly long positions. But what I want you to see in the charts, it's starting to roll over here. So let's take a look at GLD first, and look at this. It ran right into that volume profile line, and sellers reemerge. So this is what you're looking at, momentum. Look at the MACD kind of popping up, and then it's go flatlining. There's just no momentum off of this move higher here in price. You can even see the RSI starting to slow down, so momentum is trending off here. It tells me there's a move to the downside coming. Let's take a look again. The CTA models. Let's see. What did they say? We're looking for buying above 2,000 an ounce. And here we are on gold futures. So looks like there could be, we're at 1998, a little push if we see prices move up on Monday in the pre-markets or in the futures here. That could drive the machines to buy them, but they're almost maxed out. We'll see if this volume profile holds as a sign of support. You see it did. It crossed the 50-day, bounced off this and pushed up. But what I want you to see on the 2-year chart, we've seen this case where it got down here to 1920, which we said it would happen. It did. And then look, it bounces way up and got right up into this level here, just could not sustainably move higher, and then selling broke down to our next target at 1820. So that is still in play. Let's take a look quick at the dollar here. Momentum remains positive. Remember when momentum was the other direction, I said, look, it's going to flip. And sure enough, it did. RSI is at 54. MACD, nice positive cross. Our Friday close at 28.17. Our upside target was 28.08. So we hit that. I think we don't have a whole lot more room on the upside. 28.62. I'll show you that. Our machine positioning is showing there was a material shift in buying, and that is with no surprise. Remember, machines are trend following, not trend establishing. Here we can see the 200-day moving average. As we look at UUP acting as a sign of resistance, I'm saying that hits it again, and next thing you know, you see this kind of roll over and head down. Part of the catalyst, if you need one here, is everyone believes the Fed is in charge of the dollar. They're not, but if they look to believe that the Fed's not going to hike a whole lot more, that would suggest that traders are going to start selling the dollar. There's your catalyst for that. All right, let's go on to the DXY, and what do you see? It's running right up here into this prior area of support. That usually means it's resistance. Could get a rally up here to the 50 or 100-day moving average. If that rolls over, dollar down to 98 is the next move. All right, let's get an update on platinum. As you can see, we put this trade in based on the CTA-Timer Pro report on July 13th. The buy it open at 89.36, currently at 86.50. So what's going on here? Well, momentum is still positive. Look at Momentum Timer Pro. Pick up 15 consecutive daily buy signals. So just because the dollar moved doesn't mean that momentum is broken on this. Let's pull up platinum and see what happened in the charts. And what you can see, it ran into the 200-day moving average, right where that volume profile was at, got rejected closed the gap. This is important, but I want you to see that we've seen moves down like this where price comes down, bounces up here, pulls back down right to the area of support it's at now, and then takes off. In fact, you see this happen several times. So there's a good chance that we're going to see that again. So we're going to leave this trade on, even though we see kind of momentum rolling over here. I have a hunch that if the dollar turns back down, you're going to see this shoot to the upside in a material way. So that's kind of an interesting setup there. But again, a lot of people probably on trading that would get stopped out, but we're going to say, hey, let's hang on to it. Let's watch it. Let's see what happens. Because now I want to introduce you to our sponsor for today's show, which has a very kind of wild chart set up. You're going to kind of find this one super interesting. So hang tight, because I'm going to show you a possible way to do a 14% move to the upside in the short term with a bigger setup, a 58% move. And our sponsor for today's show, AEON Biopharma, who is activating the full potential of therapeutic botulinum toxin. Now they're traded on the New York Stock Exchange under symbol AEON, and they've got a wild chart set up. You're going to love this. Show you a potential 14% move to the upside with a bigger picture move of 58%. When you see this, you're going to be blown away. Now, of course, we have information in the description and the pinned comment below, and they're dedicated to unlocking the promise of therapeutic neurotoxins to treat an array of nervous systems related conditions. Their formulation and bold treatment paradigms have the potential to provide lasting relief to millions of patients and offer unique opportunities to providers and payers, as we're about to show you, and also to their investors. And they're focused on ABP-450, one molecule, a myriad of possibilities, as injectable neurotoxins are renowned for their versatility, resulting in numerous regulatory approvals for both aesthetic and therapeutic uses. However, there are a myriad of potential uses for therapeutic treatment of numerous medical conditions that have yet to be explored. And at AEON, we're focused on solely on developing and delivering proven treatments to the people who need them most. And their lead candidate is ABP-450. This injection has demonstrated the ability to significantly reduce symptoms and improve function in patients with chronic nerve and muscle-based conditions. Now let's take a first look at their stock here. They're trading on the New York Stock Exchange under AEON. Put this on your list of things to watch, because look at this setup here. It's absolutely wild. You can see their stock was holding right around, we'll just say $10. It traded between the high 9s and 10s for a long period. We're looking at a 5-year chart, and then all of a sudden you see this big move down, a consolidation as sellers just unload here, buyers come back in, and it goes straight vertical. And then of course on the announcement we're about to show you, the stock came down again, and guess what? It's making a very similar consolidation to what you saw before, and that's where we're going to show you a short-term 14% move to a bigger 58% move to the upside. And this was their big announcement. AEON Biopharma announces closing a business combination with Metre Acquisition Corp and provides a pipeline update. One of the big things here is they still have cash. And what the cool part is, these committed finances between this provide the capital necessary to consummate the business combination and are expected to provide sufficient proceeds to fund the company beyond the announcement of top-line data from the company's phase 2 study of ABP-450 for the preventive treatment of episodic migraine anticipated in the fall of 2023. So of course we can note that that information is coming in the not too distant future, setting up a potential big move in their stock. Let me show you this in more detail as we get in. And what we note here on the 6-month chart, you can see price came driving down and then came grinding right to a halt here right around the $6 price range, putting a short-term move up to about $7.26, the bottom of that other range here, which is support, now would be the first level of resistance. And here's their pipeline as they operate on the forefront of neurotoxin research. You can see they're focused on episodic migraine, chronic migraines, cervical dystonia, gastroparesis, and post-traumatic stress disorder. And of course, we know that their first results are coming on the episodic migraine here in the second half of 2023. And what we love about them is they've got $25 million in cash and absolutely no debt. So they've got sufficient capital, so they're not going to be looking to sell shares to raise any money. And that is a good sign as we look to see their stock price go higher. And here you can see the initial setup. This is that previous down move, and you can see it consolidated for a bit and just went absolutely vertical. And look, now you're seeing a very similar setup with a short-term move to 723. There's your 14% move with a bigger move up to $10.27. There's your 58% move to the upside, because that puts their stock trading right back where it had been for the last 5 years. And here's some of their investment highlights. They have strong potential as their botulinum toxin has demonstrated utility across dozens of published uses, expected to be accessible under ABP 450, an accelerated and simplified commercialization timeline due to the existing aesthetic BLA and manufacturing site approved by the FDA, EMA, and Health Canada. It's a market ripe for competition as episodic migraine market is expanding. There's the PTSD opportunity. They've got a great business model, and on top of that, strong leadership and sponsorship. And here we can zoom in again, this now to the 30-day chart, looking at a 1-hour candlestick. You can see this beautiful bottom here. You can see the RSI building momentum. You can see the MACD building, telling you there is a definite tradable bottom here up to 739 in the short term. There's your level of resistance, and a breakout above that takes you all the way up to a potential 58% return. Now, with all stocks and all companies on our show that we have as sponsors, you're under no obligation to purchase them. Be sure to do your own research before placing any trades. But again, AEON Biopharma, trading under the symbol on the New York Stock Exchange, AEON. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.